what do you mean here? We're in the dollar business, right? It's the US dollar. It's the ultimate currency. The dollar business or the money business? What's happening?
Yeah, I think that's a great question for the moment for leaders and financial institutions everywhere. Matt, is this core, you know, I guess, soul searching moment of are we inherently in the business of dollars because that's the business we inherited from the generations before us? Or do we have some moral or ethical obligation as financial institutions to communities to focus on creation and preservation and utilization of capital? And if people are paying attention to what's going on in the cryptocurrency and digital assets and decentralized finance markets right now, they really need to ask themselves if consumers and communities are already answering that question for them. You know, if consumers and communities are deciding to move capital and transactions, deposits, loans, borrowing, payments to these decentralized cryptocurrency and digital asset networks, then they're telling us that we are in the dollar business, and they're telling us that they're more concerned about money and transactions and community commerce maybe than we are.
Okay, so wait a minute. You almost seem to be saying that innovation is happening and it's being driven by the consumer rather than by the bank and credit union industries?
Yeah, not just innovation though, because I think financial institution executives would tend to think of innovation as, you know, what's the new loan origination system or the new online banking or mobile banking system or core that they want to buy and install. Innovation in the sense that I see it, and maybe you're using it, is consumers are defining what money is becoming. Let me clean that up. Consumers are telling us that money is becoming part of the internet, and that money and commerce and transactions are moving outside of our institutions. They're telling us that they trust these distributed technologies, these decentralized technologies, to transact with each other more, and they value that transaction more than transacting with us as legacy FIs.
Wow. Okay, so money is becoming part of the internet. Help me with that. I mean, the internet got developed as this channel, if you will, to access information. But what does it mean that money is part of the internet?
I think that you know, there's a lot of fixation right now on specific cryptocurrencies and digital assets like Bitcoin. But it's important in my mind that financial institutions understand that Bitcoin is simply one phenomenon or one example of a global dynamic that's taking shape right now, which is that consumers and businesses are using global technologies, global networks of decentralized ledgers, you know, distributed ledgers, to move away from centralized financial institutions and to transact with each other, borrow from each other, store money and value on these non-institutional servers. And so quite literally, there is a network around the globe of ledgers that is allowing people to use and store money that has nothing to do with the dollar, nothing to do with any nation state issued currency, right? And that this is an important decision that consumers and communities and certain commercial institutions are making to move away from trusting institutions and to trust technology and each other as a global network of commerce, right? That's what I mean by money becoming the internet, or the internet of money. There are some other great minds out there that are saying that these early tremors that we're seeing of mass adoption of these currencies is really the beginning of what will be Web 3.0, right? Or Internet 3.0, meaning that the internet becomes not just a place of information exchange and consumption, but of commerce, and that the institution, central bank, government, financial institution, is displaced from any epicenter in commerce, and trust is placed in global networks and in peers on that network.
Okay, so I think folks that are watching our video, most of them are going to understand that these non-institutional distributed ledgers are expanding rapidly. I mean, the news has been all about, you know, Elon Musk and Bitcoin and whoever else. But how does the local bank or credit union fit into that? What can they do? Aren't they working in a very different world?
Well, they're living and they've inherited the world of the dollar, right? So certainly the prevailing paradigm in the financial institution world now is that they're in the dollar business. I would suggest that financial institution executives and leaders, regulators, legislators need to realize that if we don't allow that thought to expand to, you know, being in the money and capital and commerce business, then we won't have a business, right? So we've got to, those institutions need to find creative and curious partners like us. They need to plug into those distributed networks in a responsible way. They need to know how to use their core technologies and their core data sets to keep them plugged into that future of commerce. They've got to be able to make value propositions to their communities and their consumers to let those communities and consumers and institutions deposit, you know, those new assets with them. It's not going to be easy, right? It's going to require conversations with regulators, governments, and all kinds of organizations, and it's going to require a focus on data commerce, use of data, digital connection to community, as opposed to just the easy and lazy movement of money through EFT networks and ACH networks and SWIFT, which we've inherited for the last 30, 40 years and are probably at the tail end of that, right? As a presumed norm or as a stable norm.
The dollar business versus the money business. What's the quickest way to distinguish and define the difference between those two concepts?
If your institution is only able to offer products and services based upon the movement of dollars or digital dollars, if your products are debit cards, credit cards, mobile banking, online banking, ACH, wire transfer, check, right? ATMs, all of those things are predicated on the dollar business. And we're at a crucial moment for fashioning financial institution strategies, because we see consumers and communities starting and big corporations starting to invest in and adopt new networks, global networks of exchange, like Bitcoin, but also Ethereum and XLM and XRP and ADA and all these other technologies that sidestep the whole dollar business. So we're in this moment where we're starting to see communities and consumers and corporations choose to be in the money business and the commerce business and the transactions business, and those businesses that they're building aren't predicated on the dollar. If our institutions are, we have a extinction level challenge, right?
So John, you've defined how the consumer and these you say alternative and distributed ledgers outside of the quote unquote banking industry are taking off. But the consumer is obviously driving that. I mean, they are taking advantage of that capacity. But what about the local community? I mean, how does that relate to what's happening in my community, financially speaking?
Yeah, so Matt, you know that DeLand is very passionate about the thriving of community financial institutions, and that that there are strong community FIs that provide that are the epicenter of commerce and provide affordable access to financial services, right? I think what we're seeing right now is an industry that is in the late quarters, of the game, which is the dollar game, right? And so we've been at this current digital dollar game since the early 70s. So we're 40 plus years into this thing. or 40 years into this thing. And we've got financial institution products and services that have really gravitated over time towards encouraging people to be consumers, right? To be engaged in primarily spending and transacting in dollars, and and we are part of a system that, you know, is a temporary storage network for those dollars before they're spent in some kind of consumption. There seems to be, and that happens through debit, credit, ATM, right? Check, Swift, ACH, whatever. But we're these temporary storehouses on the chain of consumption. What we see right now, I think, with digital currencies and cryptocurrencies and DeFi and digital assets taking place globally as networks outside of the traditional FI network, is that perhaps communities and commercial institutions are finding a way to connect with each other apart from the dollar, which is largely predicated on consumption now, spending, debt, right? And there seems to be these value storage and capital growth and wealth creation and decentralized finance networks springing up all around our traditional institutions. And I think we should really pay attention to this, because it seems to be yet another symptom of consumers evidently losing trust in our institutions and choosing to move away from being consumers and to being part of some other global digital economy that doesn't have anything to do with traditional FIs.
I think it's interesting that you mentioned the concept of trust. And obviously, community financial institutions feel strongly about the trusted relationships that they seek to create in their local communities. But you mentioned the Edelman Trust Barometer, I think, came out just a few months ago. And I think it represents that there isn't as much trust in the industry as I think individual institutions would like to believe. How do you reconcile that?
I've been working with community FIs for 20 years, in and with them for 20 years at this point. And what every single one of them has in common is that they provide the best, you know, customer or member or community service of anybody, right? Meaning that they earn that trust of that, you know, customer or member through that stellar service, which is, there's truth to that, right? But we can't ignore the emergence of technologies and global networks and, you know, methods of digital value storage and exchange and transaction and lending that are cropping up all around us and appreciating and becoming more valuable at an exponential rate, you know, week over week, month over month, more users, more dollars, more transactions, because it seems to be that, you know, our consumers are shifting their mentality to, you know, taking their capital and their commerce to these other networks. I mean, they can fill out whatever you can collect whatever, you know, net promoter score or member satisfaction survey you want, or customer satisfaction survey you want. But if they're moving their capital out of your financial institution, they're not investing in you as part of their future. They're voting with their capital that they trust some other mechanism for wealth and flourishing and growth and connection to commerce. And that's startling. It should be startling, right?
So there are many different sets of data. And I think what you point out there is that the credit union, the local community bank, you know, may be getting great feedback through their satisfaction surveys, but simultaneously, money is leaving their networks for a different kind of network. And perhaps there's data there as well that needs to be brought into that equation. I mean, that's, I think, the picture you're painting.
Yeah, we suggest to our clients that they should look at their transactional data in their core banking system, and they should look at how many transactions are taking place over Venmo, PayPal, how many ACH transactions are going to Coinbase, to BitPay, to Kraken, because I think people will be shocked to see that there are more people voting through those kinds of transactions, and there's more analysis to be found in that type of data than there is in this legacy notion that our members or customers are going to tell us what they think, right? We're in the business of storing and using capital for our financial institutions are supposed to be in the business of storing and using capital for the good of the community and the individual, right? Enriching and providing financial flourishing to the community, fair and affordable access to financial services. So regardless of what we feel like they're saying through NPS or customer satisfaction or whatever, if they're moving capital to those destinations that I just said can be researched in ACH data, right? Then they're voting whether or not they trust us to provide flourishing wealth, relevance, connection to commerce for them in the future, and they're voting no.
Well, I guess one of my observations, John, has been that in many ways, operations sometimes is steering our strategy. In other words, we're accustomed to doing things in ways that were well supported before recent advances in technology, and we're comfortable with them.
Yeah.
There's a great deal of discomfort moving to more automated, intelligent, if you will, technology leveraged processes. How do we get around that when we're human beings, we're comfortable with what we know, and yet it's time to take a leap forward with the technology that you guys have available?
Yeah, so financial institutions have a massive, they have these massive edifices and structures of operations that support moving dollars, right? That's what they do. That's what they've done for 100 years, 100 plus years. And for 40 plus years, we've primarily moved the digital dollar, right? Inside of our core banking systems. And so we have these extremely entrenched operations that focus on all the switches and toggles of dollar movement and features and functions of accessing and seeing and making dollar movement flashier and more fun for consumers. My suggestion to financial institution leaders in the moment would be, you can continue to guess about what your member or your customer wants in terms of dollar movement and what your community is going to do in terms of dollar movement. And you can keep playing the game of making the dollar movement flashier and more fun and more experientially appealing. Or you can realize that you need to get some more modern digital solutions out there that allow you to collect data about whether or not those members are actually doing the majority of their transactions in the dollars, or if they're trending away from it, or if they're voting in some other mechanism for value storage or transaction or commerce. I believe that institutions have got to separate from this historical trend of the technology and platform project, right? The 12 to 18 month long project of deploying the perfect set of features and functions. And they've got to put digital tools out there that let them adapt to very rapid trends and behaviors that are emerging, rapidly evolving trends and behaviors in consumers and communities that really may not have anything to do with what we think consumers want to do with the dollar, right? The consumers I think a lot of institutions need to reckon with the fact that their online banking and mobile banking are not their consumers' primary point of engagement for the dollar. Venmo, right? PayPal, their whatever, Apple Pay, Google Pay, right? These are the mechanisms. So if we're not winning the digital engagement of the dollar business, we've got to put out tools that look past the perfect dollar movement platform, paradigm, fallacy, whatever. And we've got to look at digital solutions that position us to evolve with the rapidly evolving sentiments and behaviors of communities and individuals and how they want to store and move money.
Okay.